through their and later I will open the floor for Q&A. So you can either send in your questions through the chat box, or you can unmute yourself and introduce yourself and ask questions directly from the management. Next, I would like to introduce my team who is here with me today. I have Mr. Shyam Sathasivam, Managing Director for both consumer and healthcare sectors. Mr. Aruna Deeptikumar, Group CFO. Mr. P. Simon, CEO for Medical Device.
They are having this.
Right. Mr. Surit Pereira, CEO of the consumer sector, and Mr. Dinesh Pananwala, CEO of Agribusiness. I would like to take you through some corporate announcements which have taken place over the quarter. As you would have heard, we have received the $5 million funding from IFC, very specifically consumer business. Just give me 1 second. Sorry for that disturbance. So as I was saying, on corporate announcement, we announced the receipt of the loan from IFC Sunshine Consumer. That was $5 million, and this went into the expansion of the consumer business. We actually settled a bridge finance that we took out when we bought into DNT a year before, given the timing issues. We have also gone ahead and amalgamated Sunshine Energy, which was a shell company after we sold the two underlying businesses, which were the hydropower business, which we sold to Aken Spence, and also the solar power business, which we sold to Windforce. So that has been amalgamated into Sunshine, and we have fully exited the energy business. We have also gone and amalgamated Agba Pharmaceuticals into Sunshine Healthcare. As you may be aware, late last year we announced the merger of the two companies, and as part of our integration program, we have gone ahead and amalgamated those two companies during the quarter as well. So I think to take you through the results on the group side, I will hand over the floor to Aruna. Aruna, over to you.
Thank you, Hiran. Hope you can move the slide. Good afternoon, everyone. Let me take you through the Sunshine Group financials and key highlights. It's happy to announce that Sunshine Group crossed 24 billion in revenue in 9 months, which is almost the same number that we have achieved for last full financial year. And also group crossed 3.5 billion milestone impact for 9 months, which is also a growth of 89% year-on-year in the same period. So moving on to the financial highlighting, prior to moving on to the financial highlights, I want to emphasize few things that you can see our published financials from CSC, where net financial cost of the group dropped favorably year-on-year, mainly due to advantage of lower interest rate prevail during last 9 months, and also early repayment of one of our US dollar loan. So it's also favorable for the group. And also tax rates dropped during the current financial year because of the enactment of the tax revision happened last quarter of the financial year. So, and also Sunshine Holding declared and paid an interim dividend of 50 cents per share in December. So, with regard to the quarterly numbers, group recorded 8.3 billion in revenue which is a growth of 28% in the same quarter. You can see a significant growth in PAT. It's about approximately 86% against the same period, same quarter last year, and mainly due to revenue growth and reduction of the net finance cost and also taxes. And also you can see, Kiran, if you can go back to the previous slide, sorry. And also you can see the composition of the revenue and led by healthcare and also FMCG and agribusiness. And also you can see agribusiness revenue growth is significant, mainly because of the NSA improvement. Next slide, please. So you can see, you can read the numbers, but I want to emphasize here that EPS has grown significantly. It's 66% for the year, for the 9 months period, and also for the quarter also, you can see a significant growth in the EPS. And also agribusiness had significantly contributed for the group profitability for the 9 months of the financial year. And next slide, you can see how quarter growth split from new businesses and the organic growth from the existing businesses, because we have had a few acquisitions last year. That's also contributed for the revenue as well as cost structure as well. You can see how it's moved from last year quarter to this year quarter, this quarter. Thank you. And then Imtiaz, CEO of HealthGuard Retail, will take us through the next couple of slides. Thank you. Imtiaz?
Thanks, Aruna.
Okay.
So HealthGuard for the quarter 3 and for the 9 months ended continued to have a very strong performance both in its physical and digital channels. This was primarily driven by retaining the shoppers that we had been acquiring, new customers that we have been acquiring through the preceding quarters. And we have been able to even add more customers during the 3rd quarter as well. This was one of the primary reasons for the continued growth in both channels. In terms of segment, both pharma segments and wellness segments did very well in driving HealthGuard's growth for Q3 and for the 9 months. So focus on ensuring that our offering continued to be better for both the physical and the digital channel helped us to sustain our growth through the quarters. Moving on to specifically the digital channel, we have seen that we are continuing to get a larger portion of the online sales and consistently being able to grow the online footprint of HealthGuard. And this has led to us being able to drive growth in the entire chain. And we've been also able to increasingly build our digital presence and digital engagement through the quarters. Our focus for quarter 3 was primarily to improve our partnerships and strengthen other multi-channel digital channels, and to also further strengthen our digital presence for the quarter. So driven by a strong performance in digital and supported well by digital, HealthGuard has been able to continue its growth for Q3 and maintain its growth also for the 9 months. Thank you very much. I'll hand it over to Sayandan to take us through the Sunshine Medical Devices performance.
Thank you, Infi. So let me take you through the Sunshine Medical Devices. And as you can see in the graphic, it had been a very good quarter and a very good 9 months closure for Sunshine Healthcare. because the market indicators were positive for us to make a positive performance, because as you can see, the hospital occupancy, the lab test, the operation theater utilization all kept increasing from a COVID environment the previous year, which helped us to achieve. And the medical devices, which recorded a 4.2% growth for the Q3, recorded a YTD growth of 15.2%, mainly because of supported from the three sub-segment in the medical devices, namely diagnostic, surgical, and the equipment. And those growth came from the principals such as 3M, Johnson & Johnson, and Siemens, which had been a positive performance for the quarter and the year-to-date ending 9 months. And moving on to pharma, as you can see it here, again, a significantly high performance from the pharma sector as well, where we recorded a 35.5% quarter growth in the Q3 of the financial year. And also the gazetted price increase, which was allowed by the government or the Ministry of Health, helped us to increase our margin. And NMRA delay is largely an industry concern, but because of our positive distribution, and since we have our own distribution, we were able to focus on our sales and achieve, and significantly we have grown compared to that of the market growth. And it's the Sunshine Pharmaceuticals which had been growing the highest in the market, allowing us to increase our market share. Moving on to manufacturing, you can see our Lean manufacturing too recorded a positive growth in the quarter of 7.4%. And the notable achievement in the quarter was that our new plant got the GMP certification. And in addition, we got registration for 8-meter dose inhalers, which will help us positively contribute to commence manufacturing from this end. So this consolidated, all put together, we recorded a positive performance for Sunshine Healthcare. And as you can see, it's a 33.9% growth compared to the quarter of the previous year. And if you can see the YTD performance, it's at 42.6% performance. And we recorded almost a 13 billion consolidated revenue performance. The GP or the EBIT margin increased for the quarter, but overall there's a 0.5 decrease because of the early stages of Sri Lankan rupee depreciation, which had contributed. But this allows us to end up the YTD at a 846 million profit after tax. So this had been the healthcare performance, which had been significantly increased compared to the last year and the last quarter. So with this performance, let me hand it over to Surit, who will take you through the Sunshine Consumer. Over to you, Surit.
Thank you, Sandan. So I will take you through Sunshine Consumer performance for Q3 and year-to-date. Yeah. So here you see the market shares. So the market shares, there was a small dip in the Q2, and we have managed to regain market share, especially through Waterwala in Q3. Now, the main thing is that in terms of growth, you see that it is there is year-to-date 10.3, but third quarter is 6.6. So, I mean, as you know, the current situation in the country has somewhat affected FMCG brands, mass market brands. And we see that market growth, which was about 10 to 11%, has in Q3 come down to 6%. So that has been the main challenge that we had. So, however, gaining market share is a good indication that we are doing better than competition. And also in the growth, what the brand that has led the way for this year is Zesta, showing a 11% volume growth and a 14% value growth. Yeah, going into confectionery. So it is encouraging to see confectionery back to growth. In Q1 and Q2, there was about a minus 10% growth. Now, why was this minus 10%? If you recall, sometimes we forget, but there was a lockdown from 1st of May to 21st of June. So this affected the Q1 results, because this is a category being an impulse category. Now in Q2, there was September, and also we went through sales reorganization, where we there was a distributors for the dainty as well as Sunshine Consumer. So we amalgamated these distributors, and this was a big exercise. And also we did some change in the route to market model to make it more effective. So this also impacted. So, but in Q3, we have managed to grow. And then, of course, from here, we will continue to grow. So we see that toffees, jellies, and chocolates were the main contributors, and you see very high growth for those. So obviously there are some categories that have declined. The categories that have declined are mainly biscuits and gums. So here there was these categories were badly impacted by the significant. So we focus less on those categories and really drove the categories that gave us the better margins. And also the picture you see, dainty, we have rebranded, we have launched new variants, point of sale displays have been strengthened. So this is a good story for confectionery at the moment. So this is a new launch. This is actually a Q4 launch, but I'm just informing you because you will see this product on shelves. So this is Sesta Red. With Sesta, Sesta, we have had a very loyal consumer base, and because of its taste. However, the why more consumers have not taken to Sesta is its strength. So this variant, Sesta Red, is a mix, is somewhere in between Waterwala and Zesta. So whilst it gives a good flavor of Sesta to some extent, not to the fullest extent of the current Sesta, it also has the strength. So it's a unique blend that gives flavor, strength. So this has just been launched, and we are hopeful that this will drive volumes further for Sesta. So looking at the P&L, so revenue reduction has the revenue, the growth in revenue is something that has also impacted EBIT, but more than that, also the gross profit. So gross profit has come down mainly for confectionery. In tea, the margins are higher, but in confectionery versus a 35% last year, this year has been about 26%. So this has to do with the significant cost increases. We couldn't pass all the cost increases to the consumer. And also we gave time for our sales reorganization to stabilize. But in Q3, we have towards mid and end, we have taken price increases in 24 SKUs. So we are expecting the gross margin to be higher in Q4. So the EBIT and the PAT reduction is mainly on that, and also some higher finance costs impacting PAT. Now I'll hand over to Binesh to take you through the agri sector.
Thank you, Suresh. Good evening to all of you. Agribusiness performed very strongly during the Q3 as well as the price factor. In the global context, the CPO prices increased due to low global output, mainly driven by drop in production in Malaysia due to labor shortage. Then also increase in crude palm oil used for biodiesel production in Indonesia, and also higher prices expected remaining in 2022 due to above reasons and the change in the weather patterns. The prices are going to maintain the global prices. After all, I think the Q2 we might see a slight drop. But when it comes to the milk prices in the dairy business, the global milk price again have been recording the highest for last 8 years. So this increase was mainly due to consistent demand for dairy amidst constrained milk supply. Then also shortage of milk powder in the market had surged demand for local fresh milk during driving up the milk price. Then also in the Sri Lankan context, Sri Lankan production had dropped from 40% of the Sri Lankan production to about 38%. That also has driven the market despite of the milk powder shortage what we have now currently. So the milk prices are expected to increase in the coming quarters or to maintain at the same level. So moving on. So as business that both business put together, it has been very strong performance, mainly driven by two factors. As I mentioned before, the price. Then also the good news is that the production had been relatively good, which is 21% over last year, the combined oil production. So also the production remained healthy due to the replanting before the ban. Because if you look at it, whatever plantation that we have had have a large extent of prime or high yielding fields. Therefore, that the production remains constant or it can be better. Then also the impact of certain things is the fertilizer cost. Fertilizer costs have increased nearly 4 times due to removal of government subsidy of chemical fertilizer. However, we are aggressively exploring formulas that can provide higher plant nutrient, and also that WPL and WBL, DL put together, both increase production in compost and liquid fertilizer. So therefore, that we have managed to mitigate some of the higher cost, and also that non-availability of fertilizer to a great deal during the Q3 as well as the first 9 months. So as I mentioned that there is a big different revenue stream coming in through sale of manure or compost that we produce have allowed the company to keep the fields fertile whilst minimizing the impact of the fertilizer cost increase. When it comes to dairy, there have been certain challenges during the Q3 as well as the first 9 months when compared to the previous year. This is mainly because of the rapid escalation of cost of feed, driven by scarcity of feed, negatively impacted the farm's profitability. We are executing strategies to ensure supply of feed at a reduced cost. Then also milk production volumes are expected to increase significantly due to increase in milking herd, supported by herd optimization. So as I mentioned that we have imported 127 pregnant heifers from Australia in the month of November in the Q3, and that has they will start yielding. As a result, the production will maintain higher. So moving on to our brand, which is Pidol Lonac. The Pidol Lonac project have been well received by customers and demand continues to increase. And also that I must say it's the opportune time for us to establish this brand due to the reason which I mentioned about the shortage of milk, etc. And also in the health aspect, there was healthy growth in for a single source farm fresh milk, which is coming, and also the quality is guaranteed, which you don't get that type of milk in the market. So as a result, there is a huge volume growth mainly on the 1 liter SKU. And also we are present in the modern trade, and also the sales volumes are on the increase. We are currently developing products, different products, the dairy products, to serve Sri Lanka with good quality single source farm milk. So if there are any questions, I would like to take it later on. For the time being, I would like to pass it back to Hiran. Over to you, Hiran.
Thanks, Binesh, for that description on the business and the update. So I would like to open up the floor for questions. You can send in your questions through the chat box and I will moderate, or you can unmute yourself and introduce and ask questions. Okay, so first one from Ruchi, I think on the healthcare sector. Shyam, if you don't mind taking this. The question is, can you discuss why EBIT margins improved in the healthcare segment?
Sure. So in healthcare, I think what you're seeing across quarter on quarter is one of the issues was the gazetted price increase that the government granted us for the essential pharmaceutical products, and that takes a while to play out. We also had some, currency losses in the forex losses in the first quarter, which have since sort of once with the government holding the currency at 203, we've been making all of our payments on that. So that's also got better into Q3. We've been able to pass down the price increases both from the government gazette as well as increases we took to adjust for the devaluation and costs, as well as some improvements in the forex. And those are the reasons that have contributed to EBIT margin healthcare doing well.
Shyam, there's a follow-up question, I think, again on pharmaceutical and the dollar. How will pharmaceutical product import be impacted due to the dollar depreciation?
So right now, pharmaceuticals is still an essential product in the sense that from the banks, etc., we've been able to, open LC's product has been able to come in, but we've brought it to the attention of the ministry, both finance and health, that there are a lot of smaller players in the market who are facing challenges. So we see a lot more availability gaps. We're noticing this in our health card pharmacy in terms of product availability. So this will be an issue if the situation continues as is, as well as there will be other costs in the system. I mean, our transport costs and other costs in the system, which will have to get passed down into the business. So I think Q4 will be a wait and watch quarter on that.
Thanks, Shyam. I think there are a few more, but I think I'll shift to agribusiness for a bit. Binesh, I think if you can take this, the questions are again on the palm oil. What is the pricing trend? If you can share some light on the palm oil pricing I think you spoke briefly on the global trends and how that, if you can elaborate on how that will impact the local trends. And also another question on the outlook for the palm oil sector for fourth quarter. Vinesh?
Yeah, so it is actually basically the crop is cyclic. Normally we see higher crops during Q1 and Q2. Then it tapers down, and then normally the Q4 is much lower. But when it comes to the price, again, the prices it goes the other way. Usually the Q2, Q1 are lower, then Q3, Q4 picks up and then drops again. So this is more of a cyclic pattern, and that is applicable to the Sri Lankan scenario as well. In terms of the crop, in Q3, the crop was lower than Q2, and also the crop will be lower in Q4 as well. However, will be above what we have targeted and the normal crop pattern. So that's why you see an increase of 21%, and that will not be the same increase that will come in the Q4. I hope I answered the question, or if it is not clear, I can.
Thanks, Vinesh. I think there was another question on why the Q1Q drop. I think you answered that as well. So thanks. Moving on again back to healthcare. This question on how would government policy on preferential selection of government suppliers affect the healthcare sector. I think this specific question is related to the local manufacturing. Sham, would you want to take that?
Sure. So what you have in local manufacturing are broadly sort of two sets of agreements that the government has. One is the original buyback signed in 2014, renewed again in 19, with the local manufacturers who are independent private entities. So like Lena, part of Sunshine, or Morrison's, etc. You also have the government manufacturing corporation, state pharma manufacturing corporation, which has signed sort of JV agreements with a set of manufacturers who have been given priority now as they are JV of the government manufacturing for supply. So you're seeing an allocation of products. But broadly, I think the long-term picture is the Sri Lankan government, purchases close to $300 million worth of pharmaceuticals across a range of products. So the market is still there for a lot more local production. It's in the context of how things are being shared among all manufacturers and pricing, etc. That there is some push to and fro.
Thanks, Sham. A few more on pharma. So out of total pharma, how much of total medicines are price control and the price control component of our portfolio?
It's about 1/3 of our portfolio will come under the Gazette price control, which is specific MRP is on Gazette. Of course, pharmaceuticals overall have pricing regulation by the National Medicine Regulation Authority. So even for the other products, we go through an engagement process with the regulator before making changes.
Okay, thanks. So there's another question on how the new credit line from India for pharma imports play out, and would you be able to import on behalf of the government using this?
So firstly, I think we're waiting to hear more clarity about how the allocation will be. I think primarily it will be for the government state pharmaceutical corporation, who's the primary procurement agency of the state for healthcare products. So that'll be where the focus will go to. There will also be, I think, focus for the state pharma manufacturing for raw materials, and thereafter maybe the private sector. It will help overall in terms of providing liquidity for all of us to be able to bring product into the market. Can you repeat the second part, Hiran?
So the second part, would you be able to import on behalf of the government using this? I think.
Okay, so I think the government for now, in the sense, we all of our partners, principals, quote for tenders, and we facilitate that, but then supply is made directly. So this will enable the government to be able to make all of those payments and bring product in as and when they require. I think that's how it will play out.
Thanks, Sham. I think let's move back to Binesh. We have a few questions on both palm oil and dairy. Binesh, a question on any update on the 10% uprooting of palm oil plants. And it refers to earlier last.
So still the Gazette notification has not been revoked. It stands as it is, but there has not been any execution of that Gazette notification. So it remains as it is, so therefore that there is no impact on the business as of now.
Thanks. I think there's another question on the Q1Q drop on palm oil volume. I think I'll skip that because Binesh already answered that. On dairy, Binesh, can you elaborate more about the PAT loss in the dairy sector?
Yeah, so the reasons which I mentioned that there is a demand for milk, as a result that the price for milk is higher than what it used to be. Similarly, the global milk index also have gone up. However, with certain constraints that we have in getting that highest cost mitigated, which is coming under the feed cost, due to non-availability of some of the feed material and huge jump on cost escalation in the cost of feed had resulted in that PAT loss. However, that in order to mitigate this, what we are doing is that we are going into different directions to see whether we could grow our own feed, and we have put up mitigating plan when it comes to Q4, and also that the government has given a little bit of assistance to import our requirement of main ingredients like maize, etc., would help in the Q4 to come out with the PAT loss. I hope I answered the question. Kiran, over to you. Kiran, can you hear me?
Okay, let me just take a question while Hiran reconnects.
Sorry, I think I had a technical glitch there. Moving on, I think I'm going to skip through some of the questions which relates to fourth quarter volumes and profitability, because that will be forward-looking statements. Moving on to the next question. With the current palm oil ban on trees, how long the current set of plants can provide palm oil? What are the ways the company is looking to counter this issue? Binesh?
It is actually the thing that if you look at it in our crop portfolio or the age category of palm, we have about almost 56% of our extent is about younger palm. So this will go on for the next 20 years if we continue as it is. So there is no, since there is no uprooting, only thing what will not come is new extent will not come into bearing.
Okay. Another one on palm oil, Binesh. Malaysia said that they will be relaxing the COVID restriction imposed on foreign labor in March this year. In such case, should we expect any changes in the global prices?
It will change. Anyway, the prices are expected to come down in April and then thereafter the Q1 of next year. So with that getting stabilized, the prices will anyway come down. So that's a normal phenomenon what you can see.
Okay. Thanks, man. I think another one from dairy. The question is, how significant of a reduction in dairy yields would you expect if the procurements in feed persists?
there will be reduction in the yield, but it won't be to that significant because anyway, we get the feed at a higher cost. So there is an impact on the cost. However, the feeding will maintain at the same levels other than some of the feed ingredients which are short supply, which doesn't come on time and inconsistent supply. But otherwise, the feed will be more, it will remain as it is. However, the cost will be higher.
Understood. Thanks. So I think this one is for Aruna on the group finance. In which quarter will you book the 25% one-off tax surcharge?
Yeah, yes, Hiran. Actually, we expect more clarity on how to record it. So we hopefully get a ruling from clarity from CA Sri Lanka, whether it's a prior year or the current year adjustment. We got similar situation that we have occurred in 2015 also. So likewise, we expect to get more clarity on that once the final bill's out.
Thanks, Aruna. I think Ruchi will get back to you with more clarity once we understand the situation better. There's a question on M&A. I think whatever is public is already disclosed in the CSC, so I'm going to skip that. I think I've run through the list of questions which are available on the chat. If there's anything, you can please go ahead. Then if I miss something, and if you don't mind putting it again, so I can pick it up. Okay, so out of the total pharma, how much is sourced from government through buyback program? How much is sourced for the government, actually? Sorry. I think, Shyam, I think that the question is how much of tender business is contributing to the total healthcare?
Okay, so I think if I take it as from our pharma manufacturing, which is where the buyback really works through. So in our Lena manufacturing business, broadly about 50 to 60% of our business is with the government, and it's all following through on those buybacks that we have signed with them from 2014, and then products we've added thereafter in 2019. And we see the government continuing to, increase its range of products. Right now, local manufacturing has gone up from something like 6-7% 5 years ago to about 12-13% of total supply into the overall market. Of course, government is significantly moving ahead with procuring more from the local manufacturers. So all of us are looking to increase our scale of business, but we'll also see a trend of private players looking to switch some of their manufacturing to the local manufacturers. All of our partners are engaging in those discussions with us. So we see more of that also happening from the overall market. The private market for pharmaceuticals is close to 60 billion. And there's hardly anything, there's probably about 5% of it in value from the lower private market, from the local manufacturers, but that should increase significantly as well.
Thanks, Shyam. Thanks for clarifying. So I think we have run through all the questions which were posted, and it's time for us to wrap up the session. On behalf of Sunshine, I would like to thank everybody who participated and actively engaged in this Q3 webinar. So hope to see you next quarter as well. Till then, take care and stay safe. Thank you.
Thank you.
Thank you.
Thank you.